Hello, welcome to the European Open briefing for Monday, July the 3rd. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we're seeing quite a bit of risk on sentiment this morning. We had a number of manufacturing PMIs released out of several key Asian countries, namely China, Japan, as well as Taiwan and South Korea as well, all of which showed manufacturing PMIs rise in June. So that has boosted overall risk appetite in financial markets. We also had the Bank of Japan Tankan survey, which topped analyst estimates. The dollar has managed to edge up though this morning. It's expected to be rather quiet though for the dollar, given the fact that we've got the July the 4th Independence holiday tomorrow. Not to mention the fact that we do have a stronger euro, pound, and loonie, all of which are pressuring the dollar. Also not doing so well is the Australian dollar, which didn't manage to benefit from the risk appetite this morning, mainly because of weaker than expected data released out of Australia. But let's move on to the dollar. We can see in the chart here the dollar isn't doing too badly against the Japanese yen. The Japanese yen actually rose at the start of Asian trading. We can see this gap in the dollar yen pair. That was mainly because of a big defeat for Japan's Prime Minister Shinzo Abe's Liberal Democratic Party, which suffered a big defeat in municipal elections in Tokyo. The yen did start fall back afterwards, but then it rose again on the positive Tankan survey just a little bit though before the yen resumed its slide. The dollar index is pretty much stuck near last week's 9 months lows. It's slightly firmer this morning at around 95.75. So we did have that Tankan survey for Bank of Japan's business survey for the second quarter. It showed rising optimism among large and small businesses in both manufacturing and non-manufacturing sectors. The confidence among large manufacturers hit the highest in 3 months. We can see here in the table most of the indices rose in the second quarter compared to the first quarter, and most of them came in above expectations. We also had PMI out of China. The cash-in manufacturing PMI rose at the fastest in 3 months, and that was the biggest surprise because the manufacturing PMI, the cash-in version, showed a surprised expansion. Last month, of course, we saw a big divergence between the official PMI and the cash-in one, so that led to many analysts doubting the strength of China's economy. But in June, we saw a big rebound. Expectations were 49.5. We saw the figure coming in at 50.4. We also had the Nikkei manufacturing PMI out of Japan. That also rose in July compared to June, but the Australian one actually fell in May. We saw the AIG manufacturing index dropping to 55 from 59.2. And that explains why the Aussie has been struggling compared to other currencies this morning. On Friday, it had hit a 3-month high of 0.7712. We also had disappointing building approvals, which fell by 5.6% month on month in May, missing forecasts of a 2% drop. So that's why we're seeing the Aussie slip back below the key 0.77 level, but we do have RBA meeting tomorrow, so that's going to be pretty much in focus in early trading on Tuesday. Let's move on to European currencies now. We can see both the euro and the pound holding very much near their last week's highs. The euro hit a more than 1 year high, 1.1445 last week. We had, of course, early in the week, ECB President Mario Draghi again reinforcing the optimistic view for the Eurozone economy and suggesting that they would have to adjust policy as the economy strengthens. But we also had the Bundesbank President Jens Wiedmann also signaling that the ECB was at the moment working and discussing on how to start winding down its stimulus program, so that boosted the euro, although this morning the euro has dropped below the 1.14 level, just below that at the moment. The pound managed to reclaim the 1.30 level. We had the Governor Mark Carney last week striking a surprisingly hawkish tone, saying that he might be in favor of a rate hike later this year, and the pound is very much close to last week's highs, trading just above the 1.30 level. Moving on to oil and the Canadian dollar. The Canadian dollar is the other currency that's pressuring the dollar at the US dollar at the moment. We're seeing the loonie at a 9-month high. And apart from a recovery in oil prices, we do have a much more hawkish Bank of Canada. Of course, the Governor Stephen Poloz had said that the rate cuts have done their job now. But also on Friday, we had an upbeat survey from the Bank of Canada, which once again signals that the Bank of Canada is more confident about the Canadian economy, so we could potentially see a rate hike perhaps as early as next week when the bank next meets. But looking at oil now, we can see oil has been steadily recovering for the past week. We saw US and Brent crude rise by 7% and 5% respectively. On Friday, we had a surprise drop in US oil rig count. That was the first drop in several months. So we're seeing the US crude currently being supported about $46 a barrel. And of course, we still have the latest oil inventory numbers coming up, being released on Tuesday and Wednesday, so we shall see whether or not those will be positive for oil prices. So let's look at what's coming up later in the day. We just had the Eurozone final manufacturing PMI being revised slightly up for July. We also have the Eurozone unemployment rate. In the US session, we're going to have the ISM manufacturing PMI as well as the market one, plus a speech by Bank of England the chief economist, Andy Haldane. He's due to speak at 17:30 GMT. That's it from me. Thank you very much for watching and have a great day.